Hello, everyone. Thanks for tuning in. Today, we're going to talk about a significant development in the world of technology investing, one that has captured the attention of markets globally. It revolves around Berkshire Hathaway's large investment into Alphabet Inc., the parent company of Google, and what this move could signal for the tech sector, for value investing, and for the evolving landscape of artificial intelligence. The investment and its immediate impact. Just recently, Berkshire Hathaway disclosed a stake in Alphabet worth approximately $4.93 billion, acquired through about 17.85 million shares. Reuters. Following the filing of that stake, Alphabet's shares rallied by nearly 6% on Monday, reaching a record high. Reuters. Why did this move stir such a reaction? First, because Berkshire is traditionally known as a cautious investor in technology, and this appears to be something of a departure from its usual pattern. The firm has long described companies like Apple as more akin to consumer products businesses rather than high-flying tech stocks. Reuters. Second, the investment functions as a publicly visible endorsement of Alphabet's position in the AI and cloud space. If Warren Buffett's firm sees value here, then perhaps others may reconsider their own assumptions. Why Alphabet fits, or doesn't, the traditional value investing model. Let's dig a little deeper. The concept of value investing typically involves buying companies whose stock prices appear to undervalue their intrinsic business fundamentals: earnings, cash flow, stable business models. Alphabet is interesting in this regard because its shares have gained roughly 46% year-to-date as of November 2025, making it one of the strongest performing members of the so-called Magnificent Seven tech stocks. Reuters. At the same time, the company trades at a forward earnings multiple of around 25 times, which is comparatively lower than many of its tech peers, for example, Microsoft or Nvidia. Reuters. Analysts point out that Alphabet has strong fundamentals: a massive ad business, large cash flows, growing cloud infrastructure, and early moves into AI search tools. For example, Alphabet fits the value investing theme better than some of the other names that are leading the AI charge right now. Reuters. So here we have a tech company that may be blending growth-oriented characteristics with value attributes, a rare combination. The AI backdrop and broader market sentiment. However, this move also comes at a time when the tech sector faces rising caution. Many investors and analysts are warning that the rapid spending on data centers and AI infrastructure may not yet yield proportional returns, and valuations may be getting ahead of fundamentals. Reuters. In this context, Berkshire's investment acts as a counter-narrative to the caution. It suggests confidence in the long-term payoff of AI and cloud infrastructure, at least in the case of Alphabet. At the same time, the market reaction, stock rally, suggests that others are catching on to this signal. When a major firm shifts its strategy, the ripple effects can be swift. What it means for Berkshire, Buffett, and tech investing. For Berkshire, this stake is significant in multiple ways. It is labeled a rare tech bet for the firm, which has historically avoided large direct investments in high-flying tech companies. Reuters. The acquisition may reflect a certain acknowledgement, perhaps a recognition of a missed opportunity. It's been noted that Warren Buffett and his longtime partner Charlie Munger regretted missing the early investment in Google. Reuters. It might signal a shift in Berkshire's strategy, an openness to tech companies that have matured into more stable, cash flow-generating businesses rather than speculative startups. For the tech investment community, this raises questions. Does a firm like Berkshire getting involved increase the legitimacy of certain tech stocks as value plays? Will other large, conservative funds follow suit? Risks, uncertainties, and why this isn't a guarantee. While this sounds optimistic, it's important to acknowledge the risks. Even though Alphabet has many strengths, the AI landscape remains highly competitive and capital-intensive. The returns on recent infrastructure investments are not fully proven yet. Reuters. Valuation discipline still matters. A 25 times forward earnings multiple is lower than some peers, but it's not cheap in a broad market context. Market sentiment can shift quickly. Just because one firm makes a large bet doesn't guarantee success. Timing and execution remain key. There's also the broader market backdrop. Although Alphabet is performing well, some indexes and sectors are under pressure. For instance, U.S. stocks more broadly closed lower on the same day Berkshire's stake was revealed. Reuters. Thus, while the move is exciting, it is not risk-free. Implications for investors in the future. What should investors take away from this? First, pay attention to signals. When a major, traditionally conservative investor makes a move, that itself can be a data point. Second, consider the intersection of growth and value. Technology companies that can generate strong cash flows and trade at reasonable multiples may appeal both to growth and value investors. Third, monitor the AI and cloud space carefully. Infrastructure, data centers, and early AI tool deployment may be playing a long game, not a short sprint. Firms like Alphabet are at the forefront of that. Fourth, maintain discipline. Just because the tide seems to be turning doesn't mean every tech investment will succeed. Fundamentals still matter. Looking ahead, we might see more large institutional investors easing into tech, valuation compression or expansion depending on results, and a further refining of the narrative around which tech companies are safe bets versus high-risk gambles. Conclusion. In summary, Berkshire's $4.9 billion stake in Alphabet is a noteworthy development. It blends the worlds of value investing and high technology and signals confidence in Alphabet's ability to deliver in the evolving AI and cloud era. The market's positive reaction underscores that such moves can carry weight beyond the headline. Yet it's also a reminder that investing in technology still demands caution, discipline, and a long-term perspective. Thank you for listening. If you enjoyed this segment, feel free to share, comment, or let me know what you think, especially whether you believe this heralds a new era for tech investing or is simply a one-off. Until next time. Section 7. Expert Opinions and Market Insights. Experts have weighed in on Berkshire's investment, highlighting the strategic timing. Some believe this move reflects a broader acceptance of tech companies evolving into established industries. Business pundits say this could pave the way for even more cautious investors to recognize the stability and profitability of mature tech giants. Market observers note a shift. More traditional companies may start viewing tech investments not as risks, but as essential components of diversified portfolios. This signifies a potential blend of tech innovation with time-tested investing principles. The competitive landscape. As Alphabet charts this course, competition remains fierce. Rivals like Amazon and Microsoft are also making hefty investments in AI and cloud capabilities. They're all vying for dominance in a space that's becoming increasingly critical to economic infrastructure. This ongoing competition underscores the dynamic nature of the tech industry, a realm where today's leader faces constant challenges from agile contenders. Final thoughts for investors. Investors should stay informed and flexible. As sectors evolve, adaptive strategies often win out. A deeper understanding of tech dynamics could open new opportunities for both seasoned and novice investors alike. Remember to keep a close eye on fundamental indicators, industry trends, and signals from key market players. This concludes our discussion on Berkshire Hathaway's bold move into Alphabet. Stay tuned for more updates and insights on the intersection of technology and investing. Thank you for joining us on this exploration of a pivotal moment in tech investment history.